Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at two of the insurance giants of the region, and we're talking, of course, about Sagicor Financial Corporation and Guardian Holdings Limited. Now, in both cases of both companies, they would have reported quite positive earnings at the 6-month period ended June 2019. Let's take a look at some of the drivers and what we might expect for both Sagicor and Guardian going ahead. Turning first to Sagicor, and for the 6-month period ended June 2019, the group recorded, or the company rather recorded, earnings from continuing operations of just around the equivalent of 56 cents per share, which was a quite impressive 21% increase from the 46 cents per share recorded in the prior comparable period. Driving some of this improvement was an increase in net premium revenue of 65% from 2.7 billion TT equivalent to just around 4.5 billion TT equivalent, as well as net investment and other income, which was also up just around 41%. From 1.5 billion TT equivalent to just around 2.1 billion TT equivalent. Overall net income from continuing operations increased just around 60.8%. And again, as we mentioned, EPS from continuing operations increased from that 46 cent level to just around 56 cents. Now, the 65% increase in income seems quite impressive, but it was really down to a change in corporate strategy, whereby they would have stopped, and they, meaning Sagicor, would have stopped reinsuring some of their operations from the Sagicor Life USA segment, or Sagicor USA segment, which led to this quite significant jump in total revenues to the far right as of the HY 2019 period. Otherwise, after adjusting for some of those changes, it has been a nice, consistent upward trend in revenues over time. Now, the earnings per share story has been somewhat different. Here we can see that there was a nice upward trend in terms of the blue column in terms of earnings per share over the past 3 years on a trailing 12-month basis. As at 2019, however, there was a dip from $1.57 to just around 98 cents, again on a trailing 12-month basis. And this really has to do with some of the restructuring charges, quite significant, which took place in the latter half of 2018. So in the absence of such significant one-off charges, again, we expect that there should be some resumption of an upward trend in earnings, barring the unforeseen. However, to the credit of Sagicor, they've maintained their dividend payouts to investors thus far, with a trailing 12-month dividend of just around 34 cents TT equivalent for the past several periods. So at a price of just around $10.45, Sagicor has in fact appreciated just around 16% for the year, and a lot of that appreciation has been driven by Sagicor being the subject of an acquisition by AQY, and that would have received approval from both Sagicor and AQY shareholders earlier this year and is expected to conclude in the fourth quarter. On top of that, Sagicor would have come out, or the new Sagicor entity will come out retaining much more cash than it would have anticipated. In fact, it would have expected to come out of the transaction with just around $220 million in cash available for other acquisitions and other growth opportunities. Most of the existing Sagicor shareholders, in fact, would have rolled their existing equity into the new Sagicor entity, leaving the new Sagicor entity or new Sagicor, which will be listed on the Toronto Stock Exchange, with just over $400 million US in cash to pursue other growth activities. So on the basis of fair valuations, with a dividend yield right now of just around 3.2%, but on a forward-looking basis with further growth opportunities, a cash war chest to do some more acquisitions, and a recovery from the second half of 2018 performance, Bourse maintains a buy rating on Sagicor. Turning quickly to Guardian Holdings Limited, and for the 6-month period ended 2019, Guardian reported earnings per share of just around $1.06, which was quite a commendable 14% increase from the 93 cents recorded in the prior comparable period. Now, insurance underwriting activities, or net income from insurance underwriting activities, were down just about 32%, from $389 to just around $265 million year on year, while investing activities more than propped up for that shortfall in income from insurance underwriting activities, increasing from $450 million to $655 million year over year. So overall profit for the period would have increased from just around $215.8 to $247 million, a 14.8% increase over the prior comparable period. When we take a look at net income by business activity for Guardian Holdings Limited, Again, we see a nice upward consistent trend over time. And in fact, for the half year 2018, whereby there was quite a significant drop in investment income from 565 million to just around 450 million, that shortfall was taken up by insurance income from insurance activities, increasing from 210 to just around $390 million. So a nice upward trend there, and that has been reflected in the earnings per share of Guardian Holdings Limited in this pink column here, increasing fairly consistently on a trailing 12-month basis from $1.62 in 2016 to its current trailing 12-month period level of $2.43. Notwithstanding, dividends have not kept pace as quickly, with that trailing payout ratio falling from just around 40% in that 2016 period to the current level of 29.6%. It remains to be seen whether there will be any adjustments in dividends over time based on final year results. Now, at a price of just around $18, Guardian is trading at a price earnings multiple of 7.4 times, a market to book of 1.2 times, and offers investors a dividend yield of around 4%, which is above the sector average of 3.1%. Now, on the basis of improving results, but as mentioned by the chairman, with much of that performance based on very volatile investment activity and income from investment activities, Bourse maintains a neutral rating on Guardian Holdings Limited. That's it for this week's edition. For more information, give us a call at 226-8773 or 2Bourse. Email us at invest@boursefinancial.com or visit our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.